Hello everyone. Risk sentiment recovered around the world yesterday, with most stock and bond markets ending higher, including the emerging markets. The dollar gained against most of the majors, although several of the more battered currencies, the commodity currencies and about half the emerging market currencies that we track, retraced some of their recent losses. Gold, however, continued its steady decline as confidence returned. More comforting words from Mr. Draghi yesterday added to the recent reassurance from Fed officials that they're nowhere near ending their support for markets. And also, Chinese interest rates fell for the fifth day in a row, calming some of the fears about what's going on there. The downward revision to U.S. GDP was a shock. Normally the third print is a non-event, but that's Q1 data, and we're nearly at the end of Q2 now, not to mention that the figures will be revised again when the benchmark revisions come out next month. So if risk sentiment improves, will that be good for the dollar or bad? Recently, the dollar has had a mixed reaction to risk-off sentiment, gaining versus the emerging market currencies, but losing against some of the G10 currencies. The major factor seems to be how much carry trade unwind there was in the currency. Those currencies with higher interest rates have tended to perform worse recently. As we settle down, I think we can expect money to flow back into some of those currencies again, and the dollar may well lose some of its recent gains against the emerging market currencies. However, in my view, it should rally against its G10 counterparts, as U.S. rates rises are more likely to be sustained than those elsewhere in the developed world. So the yield spread of dollar assets over other currencies' assets should support the U.S. currency. Now the Australian dollar furthered its rebound from oversold RSI and stochastic levels, forming bullish crossovers on both momentum indicators, as Prime Minister Gillard was ousted from the helm of the governing Labour Party, and her predecessor, Mr. Kevin Rudd, took over ahead of the September 14th federal elections. The change was greeted positively by the markets, with the yield on the Australian 10-year note dropping by 4 basis points. Resistance yesterday and today came at 93.50, with resistance following a breakout possibly coming at 94.30, which is my near-term target for the pair. Key support comes at 92.10, the 38.2% retracement level of the major up move from 2009 to 2011, with further support at 91.40. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.